Hey everyone, doing a market update today after a crazy weekend of the banks. And so essentially right now, QQQ, so the tech sector is a lot stronger than the SPY, which is holding the financial sector in its ETF as well. And so essentially we're not seeing a fear in the market. If we're seeing fear in the market, money will be leaving every sector. It's more of a rotation today, and you can see the money flowing out of the financial sector into the tech sector today. Although we had a green day for QQQ, we still had a red day for SPY, and now we're looking at this resistance right here. So you see this wall of resistance right here, this line, and we could not get over that area as well on Friday. So you can see right here, which is Friday, and this is a pre-market, so it doesn't really count as much, but we couldn't get over this resistance on Friday cash open, and we could not get over it as well today. And essentially what I'm thinking is that the bulls are just waiting for CPI and tomorrow. So the bulls and bears, bulls bought up the morning, and now they're just waiting for CPI. If it's that comes in good, then we're very likely to break this level. And the chances of us getting a pause will be increased a lot higher. So interesting is that last week we even had a 50 basis point price thing around Wednesday or Tuesday, I forgot. It was around 70 something percent the likelihood of us getting a 50 BP point. And in 48 hours, we had that revert to a 25 BP. And then over the weekend, now 25 BP is 75% or 70%. It changes throughout the day. And now we're having a 30% chance of getting a pause at this moment. So if the data comes in good tomorrow, the pause is going to be a lot likely. And we can look at that at the treasury yield as well. So the 10-year, you can see the amount we dropped. This also gives Jerome a chance to relax a little bit, so he doesn't have to hike that much. If this just keeps on going up, then he'll have to keep on hiking. So now we're looking at the dollar is, let me see here. The dollar is a little bit, correlation is a little bit off lately, but it's still intact. So I'm not looking at it as much. Looking more towards the, this is the KRE, which is the S&P 500 regional bank ETF. So all the ETFs of the regional banks are in this ETF. You can see the amount of drop we had is 30% for an ETF in just 1, 2, 3, 4, 5 days. It's a huge drop. You can see the volume climax here, and even though there's no signs of it shaping up to be a temporary bottom yet, so what we have to look at, we zoom in, we go to the hourly time frame, and you can see we briefly, not really, we need to break this top for it to be a hourly uptrend. So we need to tomorrow break above the 12 EMA, which is the tail looking line, then break above this high for us to have an hourly uptrend to even be saying that a temporary bottom for the longer time frame is in. We could just have an hourly uptrend, then boom, back down again on the longer time frames. But that's just the first step that the bulls need to do and to form an hourly uptrend. So I'm looking at that, and also the financial sector XLF, which ties in pretty much with KRE, but the financial sector is a lot larger. This would be XLF includes all these sectors in holdings like JP Morgan, all that stuff. The bigger banks as well are in this ETF. So let's see how much it's dropped in a couple days. 12% in this ETF. So what I want to see is this sector give us a temporary bounce. If we get CPI data tomorrow, and then this sector gives a temporary bounce as well, then the S&P 500 will very likely be bouncing with QQQ, and QQQ will be bouncing a lot more than the S&P 500. So if you're thinking about going long, go with the stronger sectors like the tech sector, and if you want to go short, you'll likely be shorting the weaker sectors like XLF or IWM. IWM is the small cap sector. There's also financial holdings in that small cap sector as well. And tomorrow we'll see how the data goes. And if it goes well, then we're likely getting a daily bounce on our way for the QQQ. You can see, go to the daily time frame. And delete that one sec. So the daily time frame, we're looking for daily bounce. As you can see, we have been on a daily downtrend. We're here and still on a downtrend. We're still holding pretty well because we're still on a weekly uptrend. We are like really far away from it, the weekly downtrend. The SPY is a lot closer. So we'll want to see a tech lead us tomorrow when we get a good CPI data. And once, if we do broke high of today, which is that triple top that I showed you guys earlier, then our daily bounce likely on the way. So if we make a big enough move up, then we can have room to make a higher low in this area to potentially change our daily trend. So for example, if we just bounce, like just this one candle, there's not a lot of room for us to pull back and then make a trend change. So we need a decent bounce tomorrow and Wednesday, and then we pull back a little bit and then we continue. So we'll see how the data comes. We also have PPI on Wednesday, so there's a lot of data this week, and with other banks shenanigans, we'll see any more good news or if the bear is going to take over again tomorrow, and we'll see how it goes.